Good morning to all traders and welcome to this Thursday's Market Insights video on FX Miners. We've had so many headlines yesterday. We read that the China actually overnight first and foremost, the most important, China economy recovered 3.2% in Q2, and this is a very good indication for a post-COVID economy, we would say. However, we also saw the China now increasing the buying of more soybeans, so ramping up the US crop purchases as part of the trade deal, the phase one of the trade deal. That, of course, follows headlines seen between US and China, between UK and China. UK now has escalated the Huawei 5G network strip-off as well by ordering officially banning of new Huawei equipment from the end of this year. The White House at the same time imposes visa restrictions on Huawei workers, and where it seems like the situation escalating with China caving in, both UK and the US seem to be hitting harder. Now, don't also forget that the Canadian dollar is widely supported by the huge crude oil inventory draw from yesterday, and despite OPEC Plus and Russia reiterating that there is going to be output increase, this has supported the prices for the commodity currencies as well as a whole. Now, at the same time, when we look at all these geopolitical tensions rising, escalating, whilst we also worry about the coronavirus itself and economic repercussions this has globally, we also have to pay attention now to how the US starts a trade/sanction retaliation, perhaps as well, war with Russia over Nord Stream 2 pipeline. So I want to go ahead and start with Euro-Pound today. We are expecting the ECB decision, but earlier, like in a couple of hours from now, we are expecting the UK's employment figures. A, B, as we talked about last week, we're expecting the break of this trend line, which happened. We had wave one, and prices retraced back within the ascending trend line above. I'm still expecting prices to move down impulsively in waves 3, 4, and 5 to take out wave C correction, to end this correction, this correction in wave 2, or wave B primary, and then continue higher for fresh highs above the 95 level. But first, we need to break below the 86.70 low reached back in April. And I'm looking at the 85.34.37, which is the 78.6 Fibonacci retracement of the move to the upside, the 5-wave move to the upside. Now, in the short term, it's that either we've had this wave ending up here as an ABC, and then we'll go 1, 2, 3, 4, and 5 for wave 3, or we've had waves A, we're going to get a wave B, then we're going to get a wave C, and then we're going to move lower. Okay? So this is what I see. But because I see the RSI signal over here, it's possible that we will start moving down sooner than expected. Perhaps it's an A, B, and a very small C just with a false break, and then we'll turn lower. That also might be in play. Now, on Euro against the Swiss franc. Guys, last week we talked about these, we were actually around here somewhere, right? We talked about a wave 4 coming in and then a wave 5 to take out these last 5th wave in the minute degree as an ending diagonal, right? We're expecting the 1.0591 to be taken over. Well, 0106 psychological, it was taken out, okay? And then then prices started moving up impulsively, okay? This impulse is a multi-structural one as well. So we are looking for prices to continue moving higher and break above the 109 high registered back in the beginning of June. Okay, so with the ABC looks very down to me, unless if somehow magically this becomes a W, X, and Y. Okay, so I would also look at that. But for the time being, we're not really seeing any signals that are really showing signs of an exhaustion of this upward momentum. We only see signs, hidden signs, let's just say, that this momentum might continue well into the 108 levels, okay? Last but not least, of course, the CAD against the yen. Well, I'm looking at these as, well, there's two ways to look at it, right? One is if we ended down here, this primary wave moved to the downside. It means that we're moving up impulsively, and that would suggest that this is a leading diagonal, right? This to me looks a corrective one, and that's why it's also matching a potential ending diagonal, which would of course look at this move in the longer term as a bearish one rather than a bullish one, right? But we still have a lot of time, a few probably weeks or months maybe perhaps, to really understand whether this is going to be a leading diagonal for an impulse to the upside or an ending diagonal for perhaps further continuation to the downside for fresh lows. Whatever the case is, we are still looking at the same structures coming through. I'm looking at 1, 2, and 3 completed. I'm not sure about wave 4. Wave 4 could have finished down here, which means that, you know, somehow this is an impulsive move to the upside, which I doubt, okay, and we're going to move higher, which means we're not going to see a new low, or wave 4 is going to end lower. That means that we are here in W, X, and Y pattern, okay, and Y can end anywhere below the 78 psychological support, which is wave W low. Fibonacci 61.8 as 76.9 and the 78.6 as 75.5. Now between these two, we have a very strong activity level, okay, that's the 76 level. 76 is possible. From 79, yes, this is 300 pips. It's a very good opportunity. Are we going to get there? We do not know. But what we do know is that the moment we get a reversal signal, okay, whenever that is, then we're looking for prices to break above the 82 and perhaps even towards the 85 levels, okay? We have an RSI signal. It's not too strong, okay? And we also have an RSI signal here contradicting the one above, okay? This is a hidden divergence over here. So I'm thinking we're going to get wave X a little bit higher, perhaps at 79, 75, okay, the previous high X, and then move lower to complete a fresh low below wave W. Then this is the zone that we can start looking for prices to move higher for the fifth and last wave in either a leading diagonal wave 1 or in an ending diagonal pattern. So thank you very much for watching, guys, and I will speak to you again tomorrow.